All right, today we are jumping into the absolutely wild story of a stock that, well, it pretty much came out of nowhere. The company is called Society Pass, ticker SOPA, and it just went on one of the most insane runs you'll ever see. So let's get into it and figure out what on earth happened here. Just look at that number for a second, 275%. That is a massive, massive gain. We're not talking about over a year or even a month. You heard that right. All of that happened in one day, one single session. This stock went from being a total unknown to the very top of every trader's watch list, basically overnight. And that's really the big question we're going to try and answer today. We're going to follow the clues, look at the evidence, and piece together the mechanics behind this incredible surge. Think of us as financial detectives on the case.
Okay, so every good investigation starts with the basics, right? For us, that means we're looking at two things: the price of the stock and just how many people were actually buying and selling it.
So get this. Before all the chaos, Sopa was a super quiet stock, just kind of puttering along between $1 and maybe $1.50. On October 3rd, it was at $1.41. By the end of the very next trading day, October 6th, it hit $5.30. I mean, that is just a monumental leap. And here's where it gets even crazier. Look at the volume. On a normal day, maybe less than 100,000 shares of SOPA would get traded. But on the day of the surge, that number exploded to over 209 million. It's like a quiet little country lane suddenly turned into a 20-lane superhighway in the middle of rush hour. Okay, so these numbers are obviously dramatic. But what do they really mean? You know, it's kind of like looking at the dashboard of a car that's suddenly rocketing down the highway. We need to check the gauges to see if the engine's about to blow. And that's exactly what we're going to do next. We're going to look at the technical indicators. These are basically the market's version of dashboard warning lights. And right now, they are flashing like crazy. And this table just lays out the whole dilemma perfectly. On the one hand, you've got the MACD indicator, which is positive. That's your foot slammed on the gas pedal, strong forward momentum. But then you look over at the RSI, it's at 94.6. That's like the engine temperature needle being buried deep in the red. It's screaming that the stock is extremely overbought. And the Bollinger Bands? The price isn't just touching the top band, it's way outside of it. The car is completely off the road. Another way to think about this is something called overextension. Before this all happened, the stock's 20-day average price was just under $1.40. Now it's trading miles above that. It's like a marathon runner who just decided to sprint a mile in 2 minutes. Sure, it's impressive, but you have to be thinking, there's no way they can keep that pace up. So we've got a car with its foot floored, but the engine is overheating, and it's already swerved off the road. This brings us to the million-dollar question. What happens now? Does it keep defying gravity, or is a spectacular crash right around the corner? So let's try to map out what could happen next. And we have to remember, when things are this wild, this volatile, absolutely nothing is a sure thing. So here's the tricky part. The price hit a peak of around $6.28. That's acting like a ceiling, or what traders call resistance. But because the price went up like a rocket, it didn't build any floors or support on the way up. The closest thing to a safety net is way, way down in that $3 to $4 range. That is a long, long way to fall if things turn south. So when you boil it all down, there are really 3 ways this could play out. Scenario 1, the frenzy keeps going and buyers push it right through that ceiling. Scenario 2, those warning lights were the real deal. The engine gives out and we see a huge sell-off, maybe back down to that $2 or $3 level. Or Scenario 3, we just get pure chaos. The price swings wildly up and down with no rhyme or reason. Okay, so we've looked at the price, the volume, and all the flashing lights on the dashboard. It's time to pull all the clues together and come to a verdict. And all the evidence really points to one thing. This is, by definition, a high-risk situation. You have insane volatility, momentum that feels completely unsustainable, and a huge lack of a safety net below. That is the absolute perfect recipe for sudden, sharp price moves. And this is the bottom line, taken right from the analysis of this situation. The guidance is crystal clear. Extreme caution is an absolute must. This is definitely not a place for the faint of heart. And that really leaves us with one final big question to think about. In these moments of market extremes, when a stock just captures everyone's imagination, How do you tell the difference between real, sustainable momentum and just pure madness? Something to keep in mind. Thanks for watching.